Hello everyone and welcome to my channel. I am an accounting student in my last year and I am here to share with you my knowledge for a course I love, starting with the basic accounting principles ending to the more advanced levels. This is my first video and I hope you enjoy it and learn something from it as well. Today we are gonna make an introduction to the accounting equation and balance sheet, or statement of financial position as it's called now. I will also post on my Instagram page a short questions if you want to make further practice. Also, please feel free to PM me on my Instagram account with any question you may have regarding to the videos. You can find my Instagram link on the description. Anyway, let's begin. So basically the equation that you will need for this video is that the assets are equal with capital plus liabilities. Now, let's figure out what assets are and see some examples of them. The definition of assets is whatever the business owns or it is owed. The next important thing that you should know is that the assets are separated into two categories. The first category is non-current assets, which are expected to bring profit to the company in over than a year, and the second category is current assets, which are expected to bring profit in the company in less than a year. Some examples of non-current assets are land and buildings. Those two usually go together in more advanced level, but you can find them one by one as well. Equipment, fixture and fittings, furniture of the company, plant and machinery, and motor vehicles. Some examples of current assets are inventory or stock, trade receivables or debtors, who are people or companies that owns to you, and by you I mean in your company of course, prepaid expenses such as rent prepaid, bank, which is the amount of the money that the business have in the bank accounts, and cash. Now, let's see what capital and liabilities are. The definition of capital is whatever the owner brings to the company, such as cash, equipment, or vehicles. Here is a good point to mention that the owner and the company are two different things. You, as an accountant, only care about the business. The definition of liability is whatever is expected to reduce the company's profit. Liabilities are also separated into two main categories. The first category is non-current liabilities that are expected to be paid in over than a year, and the second category is current liabilities that are expected to be paid in less than a year. An example of non-current liability is a loan. Some examples of current liabilities are trade payables or creditors, who are people or business that we owe them money, expenses due, such as rent due, and bank overdraft. As I mentioned before, the equation that you will need for this video is assets equal to capital plus liabilities. Let's see an example so you can understand it better. Please pause the video and get the paper and the pen, it will be better for you. The first one is the example. So, if assets are 30,000 and capital is 13,000, then liability is 70,000. If assets are 20,000 and liability are 9,000, how much is the correct amount for capital? If you said that the amount of capital is 11,000, then you are correct. If the asset is 17,000 and capital is 7,000, how much are the liabilities? The correct answer is 10,000. If the capital is 10,000 and the liabilities are 7,000, then how much are the assets? The assets will be 17,000. If the assets are 23,000 and capital is 13,000, then how much are the liabilities? The correct amount is 10,000. If the assets are 39,000 and capital is 20,000, then how much are the liabilities? Liabilities will be 19,000. And the last but not least, if the capital is 30,000 and liability is 9,000, how much will be the assets? If you said 22,000, then you're correct. Here is the solution of the example we made before. If you haven't written it down yet, please pause the video and do it now. Finally, the time for statement of financial position came. Here is an example for the correct structure of balance sheet. The first thing that you have to do is to write the company's name, which in that case Elvis Presley Limited, the title, which is Statement of Financial Position as at 31 December 2002. After that, you have to draw the columns. It is always preferred to use a whole page for it. The amounts under the currency, those are the amounts. And after that, you have to sum the totals. The total of assets and the total of equity and liabilities must be always equal. Here is an example to understand the balance sheet better. Let's read it together and then I will explain the solution. Monopoly Limited had the following assets and liabilities on 31 December 2022. As you can see, capital is not given and you have to figure it out through the solution. I also strongly suggest to separate the assets with the liabilities before you go to the solution. So, land and liabilities are assets. Cash are assets. Furniture are assets. Motor vehicles are assets. Trade receivables, assets. Computers, assets. Rent prepaid, assets. Bank overdraft, it's liability. Trade payable, it's liability. Rent due, it's liability, and the loan is liability. Here is a solution for the example above. As I mentioned before, the basic things to do in the structure is to write the company's name, the title, use the whole page to draw the columns, write the amounts of each assets or liabilities under the currency, and then sum the total amounts of assets, capital, and liabilities. And remember, those total amounts must be always equal. Now, the first step has been already done. We did separate assets with liabilities above. Now the only thing left to do is to write the amounts on balance sheet and balance the total amount. In the solution, I have also separated non-current assets with current assets and non-current liabilities with current liabilities. It is a bit more advanced level, but it also worked better for me. On the left side of balance sheet is the assets section, and I have summed the total amount of non-current assets, which is $33,000, and the total amount of current assets, which is $6,000. And then I found the total amount of assets, which in that case is $39,000. On the right side of balance sheet is the capital and liability section. Since the capital is not given, the first step is to sum the total amounts of non-current liabilities and the total amount of current liabilities, and minus this amount with the total assets, so we can find the amount of capital or equity. In that case, the amount of non-current liabilities is 4,000 and the total amount of current liabilities is 6,000. So capital is 39, which is the total assets, minus 4,000, which is the total non-current liabilities, minus 6,000, which is the current liabilities. So capital is 29,000. So guys, this is the end for today. I hope you enjoyed it as I did. If you did, please subscribe and like for more videos. As I mentioned before, I will also upload a question for this video on my Instagram account. It will require to make a balance sheet and find a capital equity amount so you can practice more and be more ready for the next video. You can find my Instagram account link on the video description. Thank you for your time. Hope to see you again on my next video.